If you're a homeowner, you definitely know this cycle. Comfort is everything.
Oh, absolutely.
But the cost of keeping that comfort, I mean, it can feel like you're being held hostage.
Right. We're talking about that moment your HVAC system, your heating and air conditioning just gives up.
It's done. And it's this huge, necessary, really expensive upgrade. Suddenly you're looking at a bill with a lot of zeros on it.
A 5-figure bill, easily.
So today, we're going to try and take some of the stress out of that exact moment by doing what we do. We're going to do a deep dive into the source material. We've got our hands on the financial playbook for system upgrades from a company called Envirotech Heating and Cooling, specifically their partnership with Wells Fargo Financial Options.
And this is so important because it's about more than just this one company, right?
Exactly.
Our mission here is to use these specific terms, these codes and percentages, almost like a master key.
Okay.
Because if you can decode the difference between, say, deferred interest and a fixed rate plan in this context,
You can decode it for anything.
you gain the financial literacy to look at any major home loan. A new roof, windows, that emergency air conditioning repair, it's all the same language.
Absolutely. We have to get past that shiny promise of no interest and really understand the quiet, long-term commitment that's hiding behind it.
It's all about the trade-offs.
It is.
That's it.
So let's start at the beginning. Who is this company and why are they offering these specific options? What does it tell us?
Well, Envirotech's own claims, they really set the stage for a long-term financial talk.
How so?
They emphasize their professionals, their years of experience, all the ongoing training in the latest tech.
Okay.
So when a company says they can handle any HVAC challenge, what they're really signaling is quality, longevity.
That's the necessary backdrop then. These aren't just cheap fixes, they're assets that are supposed to last.
Exactly. They're meant to last 10 years, maybe more. And that's why you need financing.
And that's where Wells Fargo comes in.
Right. The sources mention Wells Home Projects specifically. It's the bridge to make these huge upgrades feel, accessible and affordable.
Without that big lender, most people looking for service near, let's say, HVAC Bradenton or just general AC repair would be priced out.
The cost would be totally prohibitive. That financial accessibility is the whole point.
So what's the first step for a homeowner?
Before you even compare plans, the material is super clear. The first step is always see if you pre-qualify.
That's the gatekeeper.
It is. It doesn't matter how good the terms sound if you aren't eligible for that specific plan code. And for anyone wanting the details, the provider's info is right there. Phone 941-355-3832. Email admin@e3care.com.
Okay, good context. So we know the players. Let's get into the most attractive option first, the one that catches everyone's eye.
The short game.
The short game, the aggressive option. These are the promotional offers, the ones that shout 0% interest at you.
Right. This is a deferred interest category. And it is, I would say, probably the most misunderstood financial landmine out there.
A landmine. Okay.
Envirotech, just like a lot of other home improvement companies, offers 3 different timeframes for this conditional zero-interest deal.
Let's get into those codes. You said knowing the code is key.
It is. Knowing the code means you know the contract. So first up is plan code 00018.
Okay, 00018. That's no interest if paid within 18 months.
Correct. Then you have plan code 00012.
12 months. Makes sense.
And the shortest one, plan code 00006.
6 months.
6 months. So 3 different sprints.
18 months sounds pretty great. A year and a half to get your budget in order. But we know deferred interest is not the same as a true 0% loan.
Not at all.
So what's the fine print? What's the string that ties all 3 of these promotions together?
The fine print is what I'd call the aggressive required payment.
Okay.
To keep that 0% deal alive, all 3 of these plans demand regular monthly payments of 3.5% of the total amount financed.
3.5%.
Yes. There's a $40 minimum, but that 3.5% figure, that is the number you have to hit every single month.
Okay, let's put some real numbers to that for everyone listening. If you finance say a $15,000 HVAC system,
A pretty standard number.
what's 3.5% of that? You're looking at a required monthly payment of $525.
Exactly. And that is not a suggestion.
Right. It's not optional. That's a serious debt retirement effort.
It's the condition of the loan. You're basically in an interest-free strand to pay down that principal.
Yeah.
But what happens if you fail? If you miss that final payment deadline by $1 single,
Then the rules of deferred interest kick in, and you say they're brutal.
they are brutal.
So tell us exactly what happens. Let's say I'm on plan code 0018, the 18-month plan, and I just can't make that final payment.
When a deferred interest plan fails, the interest isn't just applied from the day you missed the deadline.
Oh, no.
It's backdated, all the way back to day one, the day you signed the contract.
Ouch. And at what interest rate?
Well, we know the long-term plans have a fixed APR of 9.99%. It's pretty safe to assume that's the rate that retroactively hits you.
So let's run those numbers on our $15,000 system. You fail on month 18. What does that look like?
The lender immediately calculates 18 full months of interest at 9.99% and just adds it right onto your principal. You could be facing an immediate interest charge of what? Around $2,250, give or take.
Wow. A $2,000 penalty, basically, for being a day late.
A massive, sudden financial hit. It completely negates every penny of savings you thought you were getting.
That is the essential insight right there. The short game is a really high-stakes gamble.
It is. It requires absolute financial discipline.
You only win if you make that aggressive 3.5% payment every month and you clear the whole balance on time. It's a great tool, but only for people who are, 100% certain they have the cash flow.
It demands an aggressive strategy, yes. So if that's the sprint, let's talk about the financial marathon.
The fixed rate plans.
The fixed rate installment plans. These are all about stability. They acknowledge you're going to pay interest, but they remove that risk of the huge retroactive penalty.
And in the source material, these are the ones called plain code options, right?
That's right.
They seem built for budget predictability, something you can set and forget over the whole life of the new equipment.
They are. The structure is fixed. You get a guaranteed annual percentage rate, or APR, and fixed equal monthly payments for the entire term. No surprises.
And we have two main options here.
Two primary offerings, yes. And both of them lock in that same 9.99% APR.
Okay, what's the first one?
The first is plain code 3690. This one gives you 96 months.
96 months. That's 8 years.
A full 8 years to pay it off. And this plan requires equal monthly payments that work out to be 1.52% of the amount financed.
8 years is a major commitment.
It is. Which brings us to the second option, plain code 3692.
And this one is even longer.
Even longer. It extends the term to 120 months.
A full decade.
A solid 10 years. The APR stays the same, 9.99%. But by stretching it out, the required monthly payment percentage drops a little bit to 1.32% of the amount financed.
Okay, let's stop right there and compare those percentages, because this is where the difference in budgeting becomes, well, just astonishingly clear.
This is the most important comparison point for anyone listening.
Let's go back to our $15,000 system example.
Yep.
The short-term deferred interest plan demanded $525 a month. That was 3.5%.
Right.
So what do these long-term plans demand? For the 8-year plan at 1.52%, you're looking at a payment of around $228 a month.
A huge drop.
And for the 10-year plan at 1.32%, it's even lower, about $198 a month.
That is the entire story in one comparison. The difference between $525 coming out of your bank account every month
And less than $200.
and $198.
Yeah.
That change in monthly cash flow is just enormous.
You're essentially trading the risk of that massive retroactive interest penalty for the certainty of a manageable fixed payment over a decade.
You're trading aggression for stability. And that stability is the real product here. You know exactly what you owe every month for the next 8 or 10 years. No hidden surprises.
But I want to dig into that subtle difference. The choice between the two long-term plans, 96 months versus 120 months, 8 years versus 10, both are at the same 9.99% APR. Is it really worth extending the loan by 2 full years? That's 24 extra payments just for that small drop from 1.52% to 1.32% a month.
That is a critical question. It gets to the heart of the total cost of credit.
Right.
I mean, the monthly relief is real. Going from $228 down to $198 is about $30 a month. For some household budgets, that matters.
It definitely can.
But you have to ask yourself, what does that extra breathing room cost you in total interest over the whole loan?
Okay, so let's do the math. On that $15,000 loan at 9.99%, what's the total interest on the 8-year plan?
For the 8-year, 96-month plan, you'll end up paying roughly $6,880 in total interest over the life of that loan.
Okay, almost $7,000. And what about the 10-year?
If you extend it out to the 10-year, 120-month plan, the total interest pay balloons to about $9,120.
Whoa. So just to save about $30 a month on your payment, you end up paying an extra, what, $2,240 in total interest?
That's it. That is the price you pay for that marginal monthly cash flow relief. And that is an extremely important piece of knowledge for our listeners to have.
It shows that even with the same APR, time's a variable that really hammers your total cost.
It absolutely is. It also tells you something about the product itself.
How so?
It suggests that Envirotech is selling systems they fully expect to last at least 10 years. The financing aligns with the expected lifespan. You wouldn't offer a 10-year loan on something you think will break down in year 7.
That's a perfect synthesis point. The quality they talk about in their marketing has to match the financing commitment. They're implicitly saying this is a decade-long asset.
Right.
So let's wrap this all up. Let's get to the clear, actionable takeaways for anyone listening. We've really broken down 2 fundamentally different financial philosophies for the same big purchase.
We have the first path is the sprint. That's the deferred interest, like plan code 00018.
High monthly payment, that 3.5% with conditional 0 interest.
And a massive risk of backdated interest if you slip up. It's for the financially aggressive borrower who is sure about their cash flow.
Then there's the second path.
The marathon. The fixed-rate plan, like plain code 3692.
Stable, much more manageable monthly payments, around 1.3% to 1.5%.
But you knowingly accept that fixed interest cost, that 9.99% APR, for up to a decade, all in exchange for predictability and stability.
And no matter which path you think is for you, the process is always the same. First, you have to see if you pre-qualify. And second, you have to know the difference between the codes you're signing. Are you in that conditional 0 interest pool with the 00 series codes?
Or are you accepting the long-term stable debt of the 36 series plain codes?
You now have the decoder ring.
You do. And when you're sitting at that table talking about a huge home improvement, the critical question isn't just, does the monthly payment feel okay right now?
It's bigger than that. Does the projected lifespan, the quality, the efficiency gains of this new system, does it truly justify locking yourself into a financial plan that might last for 8 or even 10 years?
That is the pivot point.
Yeah.
You can apply that same logic to any big-ticket item financing you ever look at.
Absolutely.
The deep dive into the financial structures offered by Envirotech Heating and Cooling in partnership with Wells Fargo is complete. Go out there, understand your percentages, and avoid those financial landmines.